Turnaround Tuesday, Warriors. How's everyone doing? Hiya, Patrick. Let's have a good day. Everything in the active pips still green. For those of you that haven't really taken the opportunity to check out the great research by the Dream Team, just go to our homepage. It's also up here on the link. You could try it for 10 days. Test drive our traffic light page for all the analysis from Grega, Andre, Blake, Steve, Stelios is right here at your fingertips. Oh, look, we have a webinar here at ForexAnalytix, and we're on the air. Okay, so consider it. It's $1. If you don't find $1 worth of value, I'll wire it back to you. Let me know. Okay, so let's get back to the markets. How you doing, Kareem? So I was looking at a lot of things on Twitter where everyone said, you know, short Swiss here, you know, good entries in here. And, you know, then it started to dip, right? And can anyone guess what gave me confidence that I didn't miss it, that I was still going to have another opportunity up around this high? Any eagles in here? Or long timers? Not prisoners, but contemporaries? Okay, what gave me confidence that we hadn't seen the high in the Swiss for this recovery rally? Anyone guess? Okay, well, this is the reason. It was a confirmed high. Markets rarely peak. They can peak, but rarely peak on confirmed highs. So it's still the same way I'm looking at it from Monday. We had an inside week last week. We're still inside the range. I want to do a little selling up here around 60 or so. And it's my belief that this 50-week moving average is going to contain it. Yeah, you got it, Michael. And then give it tolerance, maybe 50 pips, looking for, after we take out this week's high, by the end of the week, taking out last week's low, which wouldn't be any major development. So we would go from 96.70 to 95.30 for an outside week by Friday. So still looking at it that way as potentially the way to trade it. Everyone with me? Give me a Y if you're with me. I think we're on our way now. I don't believe the 4-hour will confirm in another 25, 30 pips from here. So this is one of my, this is one of my Turnaround Tuesday candidates. Tuesday lasts all day long. And just something I want to point out on Aussie Kiwi now. You could see it kind of on the 4-hour, 1, 2, 3, but here you go on the 1 hour. It's even more obvious. You had 1, you had 2, you had 3. So for me, this is at least a reason. If you bought the wedge down here last week or here last week, this is at least a technical reason, a 3 drive. The trend is still kind of down. If you're an aggressive trader, maybe you try and take it down to 520. If you're just a long-term bull, I'd be looking for a retest of the wedge line down here at 520. The Aussie Kiwi, Michael. Okay, nice trade on the long side. And I still maintain a bearish bias in crude. You know, we're trading well below the breakout, right? This is the second day beneath the breakout. If it starts accelerating, you're going to have a lot of people that got long on the Syria news that will start giving up profits. Perhaps the grand prize is back under this low, which was a week ago, last Friday, before we had the big up week last week. Just take a look at the 2-week off number. It's way down there. So it would have to completely negate last week's action. Let's look at the off number in Aussie Kiwi, and that comes in at 105, 48, so we're still 40 pips above that. So those are a few things we're looking at, and let's just check out the 2-week off number in Swiss. Would be 95.88. So that would be part of, if we get this reversal week after taking out the last 2 weeks highs and then taking out last week's lows. Some decent ideas for you guys to be stalking here. You don't have to be in 20 markets. I knew guys that never left one trading pit that did not drive fiats or gremlins. Okay, so we'll see what happens. The dollar's trying to dig in its heels here. You know, I still remain bearish. Are we going to reverse here and head up to 91, 92? Looks like the path of least resistance is still to the downside. I'd welcome a pop, and a weaker dollar is also part of the scenario for the Swiss to work. Maybe it works on the last leg. And then finally, let's just take a quick look at the precious metals here. We have an off number in the gold at 1333, so we're $8 above it. This looks like a pretty good failure, and if I ignored what my bias was in gold, I would say, you know, 1365. Call it about a $30 break. With a break of 1340, it's going to take you down to 1310, and you know, if we go to 1310, they're going to flush out people. So I was thinking maybe some kind of flush under 1300, and the silver looks the same to me. It's neutral, but looks incomplete here. I think we could see something like this from here, and I think those are going to be great buying opportunities. So bearish oil, booking on Aussie Kiwi, alert for one more high in US dollar Swiss. That's my focus on Turnaround Tuesday. Hope it edifies you a little bit. You have some things that maybe your eyes weren't looking at that my eyes just shared with you. And now we're going to get a few more pairs of educated, experienced eyes. So Blake, how are you today, buddy? How things going? What are you up to?
Good. I'm up to dealing with allergies. How are you doing? It's that time of the year.
Yeah.
Definitely that time. Allegra. Yeah, trying to.
You get the headaches from the allergies too?
No, I don't. I'm a big watering hole.
Oh, okay.
not in the bar sense either. So.
Yeah, so where's the gusher in the market, man?
Well, you know, that's a good question. So, you know, right now I'm looking at the, let me grab the charts really quick. So first of all, we've seen, a little bit of you can see the euro dollar. So I have this upward trend line drawn like this. Okay. And, you know, showing, let me remove these circles here. Yeah, actually, I'll leave that one for a moment. So we had this like kind of false breakout. You can see it right here in the euro. It's pretty good at creating these false breakouts and reversing. So you can see from the previous move up here, we did this false breakout and then we reversed, right? And we have a very similar situation today. Now, if you take this trend line, okay, and you drop it through to the, you know, basically the previous highs. Oops, excuse me. Let me do it this way. Like the previous highs where you end up getting a false breakout here. It actually tested the trend line. So, you know, when I draw trend lines, I'm always adjusting them because I don't know if what I drew is really what the market's looking at, or, you know, we won't really know that you know, this was a, you know, reversal and rejection right here until, you know, unless we get like below 123 and we start breaking down, we go, okay, well, that's what the market was looking at. I mean, we could, you know, theoretically still make another high here. But the problem is that you have the euro that actually created this, you know, false breakout overnight. And when it does something like this, you have to imagine, and remember, I was sleeping, so I'm trying to get you guys to imagine what it looked like at the moment in European trade, or Asian trade. This is a big green bar, right? At one point. You think about that, right? Okay, so that was a big green bar, and that right here had people probably pretty freaked out, like, oh, it's breaking above 124, we're going long, we're getting squeezed out of our shorts, whatever the reaction was at that moment. And then we got this reversal. Whoops. Obviously early Europe, you got the squeeze, reversal, and here we are now. So now you got a lot of traders that were short, they got squeezed out. You got traders that got long in Europe, and they're early European trade, and they're like, oh crap, here comes North American traders. Now what are we going to do? We haven't seen dollar buyers, I mean, for seems like forever. I mean, the dollar's been trading extremely heavy. As you pointed out, the path of least resistance is lower, and we've really been trading heavy since this was non-farm payroll that we saw this reversal. But what we've got right now is we've got this lower trend line on the dollar index. It's for all intents and purposes, it's holding right now. And if the dollar can close higher today, I think that that might be enough to lure some dollar traders back into the market. Now, you talk about the cable. The cable's a very similar situation. I actually had an order to short the pound last night at the golden fib here at the 161% extension. I'm usually excuse me. I'm usually pretty up to fading the 161% extension if I can get filled, especially when you take a currency pair that's been moving higher in this case and has been divergent as far as relative strength. I was willing to take a shot at it. I didn't get filled. I did not get my order filled. I did short some pound this morning at 40 on this little move up that we saw over the last couple hours, but you can see the cable's back under some pressure here. So I think what's going to lure in some more dollar buyers here is if we get below this 143 level in the cable, you're going to start to see dollar buyers coming through the rest of the market as well. So, because the pound, if you think about it, the pound has been the currency pair that's been leading the dollar really lower across the board. The pound's been grinding higher. It's been forcing traders to be selling their dollars because you have this pound that's just grinding higher and higher and higher, and people are just like, screw it, just give me out of my dollars. And we've seen that, like I said, we've seen it come through the entire market. So I was telling the guys in our chat room just a little while ago, it's like, I think if you seen the pound back below this 143 level, you're going to get some dollar buyers coming back in. You're going to see people going, okay, maybe it's time to be long the dollar. Would that be against across the board? I don't know yet, but I should point out that the Aussie's been kind of trading heavy the last, if you look at, this is an hourly chart, but you take the last couple of days, the Aussie's been trading a little heavier now that it's below the 618 and it's stalling above the 618. The Kiwi over the last couple of days has also been trading relatively heavy. I think if the Kiwi gets below 73.20, that's probably going to elicit some selling in the Kiwi dollar. The dollar Canadian has been trading very heavy, and I'm still long some dollar Canadian. I'm underwater in my position, but I'm still long some, because if the dollar does get a boost, we might see the dollar Canadian recover. I'm hoping ahead of the Bank of Canada tomorrow, the rate decision, which is let me just make sure. Yeah, it is tomorrow, at 7 a.m. my time, which is 10 a.m. Eastern. So we'll see, you know, maybe we'll see a little bit of recovery before then. The Swissy, as you were talking about, you know, this Swissy, Dale, is, and I'm not long, but I'll tell you, this thing is pretty dang bullish. I mean, we got a bullish wedge pattern here. Let me put it in there. I mean, this is a bullish wedge pattern. It should break higher. You know, how much higher are we going to go? I'm not sure if we do break out higher, but it should break higher. We got higher lows, consistent highs. It should, in essence, break higher. And given the fact that the dollar Swiss is holding up better than, like, let's say you know, it's holding up better than most dollar pairs, there's a risk that we break higher here. The US dollar Norwegian krona is not really doing anything. The US dollar Swedish krona is not really doing anything right now, which is surprising because the US dollar Swedish krona was actually leading the dollar charge last week. But, you know, this week it's been kind of, you know, just not really doing anything. But yeah, I think we got to watch this cable. I mean, you know, again, the cable gets below 143 and we're only, you know, 20 pips away from there. We get below 143 and, you know, we might see some selling here at, you know, let me grab a trend line. Comes through right around the same spot, you know. So this is you know what I'm looking at here. Hold on one second. Now, Dale, you were looking at gold and silver, and the precious metals have been very, you know, I want to say challenging, but when you look at the longer term charts of like gold, okay, this is gold here. This is a daily chart, or here, let me actually, better yet, let's go the weekly. I'm going to be in a very bullish bull on gold if we break through these highs. Okay, you can see this is a weekly chart, and this is 2014. Spike high, spike high, spike high, and we spiked into it last week. So if we break 1365 or whatever, I'm going to be extremely bullish gold. But let's think about this for a moment. Gold is, at this point in time, from a risk-reward perspective, it looks like a better short than long. And I'm not saying that it's not going to go higher, because it sure as hell can. But if you're just looking at it from a pure risk reward standpoint, we're at 1340. Okay, why not short gold? And I'm just, you know, I'm not trading gold, so this is just an idea. If I'm thinking from you know, what do I do with it? Okay, if I was a gold trader, I'd be thinking, all right, well, why don't I just short it here, put my stops above 1365, and look for a move, you know, back down to 1240, or, you know, look for a move back down to 1280. Okay, if we break out, then I know the trade is to be long. I know that. But from a risk reward standpoint, this trend line's held since 2014. It's 4 years later and it's still holding. So, you know, it makes sense from a risk reward standpoint to be short. And if you're wrong, well, you know that if it breaks above 1365, 1370, it's time to be long and to get really long. So that, you know, and if gold rolls over, well, that, and it starts to go lower, then that is actually bullish the dollar near term, right? So you know, that's why I'm like, I'm looking at the dollar and I'm like, you know, I don't know if I could be necessarily really bearish the dollar at this moment, knowing where gold's at. Okay, again, you know, does that mean that gold can't break out? No. Does that mean that the dollar can't go down? No. But right now it makes a lot of sense. And like I said, gold breaks above that 1365, 1370 level. I'll be the first one to say, man, I'm bullish. I'm really bullish gold, and probably bearish the dollar at the same time. So, but I don't know if that's going to break necessarily today. Let's look at the dollar yen, because the dollar yen's been kind of messy. Now the dollar yen, it's on its own program. I have to point out that the dollar yen's not really following any other dollar script at this moment. While we're above 106.60, there's no reason to be bearish the dollar yen, other than knowing where it's at, knowing that we're up against a sell zone. But it's not going to get any type of bearish momentum unless you get below 106.60. Is it possible to get bearish dollar yen but bullish the dollar against other currencies? Absolutely it is, and absolutely it can happen. The reason why I say that, and the reason why I point that out, is because if you look at all these yen pairs, these yen pairs, they've had nice recoveries. I mean, this is the euro yen over the course of the last 2 weeks. Over the last 2 weeks, we've gone from 129 basically to 133. We've had a 400 pip grind higher. Very easily the euro yen could roll back over. You look at the pound yen, this pound yen, we're at maybe like a near-term channel top, but the pound yen's gone from 145 to 154. That's a 900 pip rally over the course of the last month and a half. Very easily that the pound yen can give up some of these gains. The Aussie yen, same type of situation, 80.50 to 84 yen. I mean, it's 300 pip bounce, in a pretty bearish trend that we've seen in the last couple months. Kiwi yen, very similar situation. We've had a really nice rally to the 200-day moving average, and it looks like it's trading a little heavier here. So the dollar yen doesn't have to factor in to what you're thinking about the dollar, because these yen pairs, they've had nice recoveries, and they could very easily roll back over, especially if risk appetite starts to wane a little bit. So I'm just looking at the dollar pairs, thinking, with the dollar index holding like this lower trend line, it's still very much range bound. I mean, if you look at what's been happening since the beginning of the year, we haven't really gone anywhere. And after having a couple weeks, down weeks in the dollar, very easily we can see a bounce back. And of course, I'm not going to be really bullish the dollar until we get above 91 or 90.50, 90.70. I mean, we really have to break this blue trend line in order for us for me to start singing a completely different tune about the dollar. But you can't rule out that we're in a range, and that we're probably a little closer to the bottom end of the range than the top end of the range at the moment. So the market right now is extremely challenging. Finding something to do yesterday was really difficult to do. I actually I spent a lot of my day. I spent a couple hours. I had to go run some errands because I'm gathering all the shipping materials to put together all the boxes that are going out to our winners of our giveaway from a couple of weeks ago. Those boxes are going to be sent out. Matter of fact, for those of you that we've heard from most of you that won your from the giveaway, you won your packages. We've heard from most people. There's like 3 people that were winners. Make sure you guys check your emails, because emails have gone out. We hadn't got a response from like 3 of the 13 winners that we got. So I guess I should mention that, because we're trying to get your gear out to you. So with that being said, Dale, you have any comments this morning?
Blake, that pretty much covers it. A few things that I'm looking at, I described already. Any view on the fact that even though crude came off, Canada didn't respond at all? That correlation broken again?
Yeah, that's a good observation. As far as crude goes, yeah, I sure as hell wouldn't want to be long crude right now. So let's go over to where crude is. We had this false breakout. We hit 127% extension of this last down move. You can see we hit it right here. We're coming off. The Canadian has not responded, but the dollar Canadian has just been trading heavy in general, and a lot of that might be because of the Bank of Canada and what people are expecting going into tomorrow. So I don't know if I'd read too far into it, Dale. I think that the Bank of Canada is having some influence. People think that the Bank of Canada could be very hawkish because of the the economic data that's been released recently, and the warm and fuzzy feelings that we're getting from NAFTA, and knowing that we're probably going to piece together some sort of NAFTA agreement. So I think the Canadian is probably being more affected by the Bank of Canada and NAFTA versus what's happening in crude. I think crude's kind of
because crude looks like a deja vu, the false breakout we had in Euro a few months back, that you use that as your thesis to ride it down for quite a ways in the Euro.
Yeah. I sure as hell wouldn't want to be long crude right now. I don't think knowing that Syria is like a one-off type of situation, and it's probably not going to intensify anymore, at least in the near term in Syria. That you got a lot of people that were buying crude based on that.
Right.
They're likely to get washed out a little bit. Yeah. We could probably see us trade back down to $64 in crude. I would think is pretty realistic. And but the other thing that I'd be thinking about crude too is, if stocks start coming back under pressure, crude naturally would be, sold in that type of situation as well. But you look at stocks. I mean, stocks don't look bearish at all. Stocks are recovering. I mean, I look at the S&P here. This is I think a pretty good view of really what we can expect in the S&P for now. This is more of a let me see if I can draw it out for you guys.
Big descending triangle.
Yeah, something like this. So with a lot of key support down here around the 2600 level, and I wouldn't be surprised if the S&P gets another 20-30 handles higher before showing a little weakness. So that's what I'm thinking in the stock market at the moment. I think we're in a consolidation type of phase at this moment. So
okay, buddy.
All right. Well, hey, I'm going to pass it over to Steve and Stelios if they're here. Good morning, guys.
Hey, Blaker.
Good morning.
Good morning.
Good morning, gentlemen. How are you guys?
Hey, Steve.
Let's pretend that we didn't have a meeting before the webinar, and when we just meet each other, right?
Yeah, right. We did have a little bit of a conversation. At least I tried to. I had a little while ago. But I am going to pass it over to you guys, as we do have Canadian
Building
manufacturing data, building permits out of the U.S., housing starts. So some data is coming out real quick. You guys have a great trading session, and
have a nice day.
All right, thanks, guys.
Kick some butt, Marine.
Thank you.
By the way, guys and girls, we will also have Andre with us showing some harmonic setups. So let's have a look at the data. I'm going to have a fast overview of some of the things Blake didn't look at, and then Andre is going to come over to show us some of the harmonic setups he has in mind, or whatever he thinks we should be focusing on. At least once per week we want to have with us Andre, so we can see the market from his perspective. Also, obviously, Grega, as we've always had, so we can always have a look at the yellow wave perspective. So Andre is going to be with us today. So Stelio, help me out with data. I can show here we're expecting building permits. It's 1330. The forecast more or less. Okay, there we go.
Better than expected. Strong Canadian data as well.
Yes.
The manufacturing sales.
Absolutely. Okay, so let's have a look. Let's have a look at what the market is doing. First of all, let me begin by the USD CAD. Here it is. Let me go down to a 4-hour chart. You can easily see, in my opinion, this is a consolidation. There is a very high chance that this is a bearish consolidation. I am holding half of my position short. I do think that it's quite likely that we're going to tag the 124.35 level. That's a confluence of horizontal support and the 78.6 of the move higher. So at least I'm hoping, we're going to get down to that. Now, other than that, the reaction seems to be more or less muted. USD yen still unchanged on the day. It has paired since earlier the overnight losses. Euro USD cable seem unchanged following the data. S&P is at the highs. Blake already mentioned it. I'm already long half a position since some days ago in the S&P. Unfortunately, I wanted to add to my position, bring it to 3/4 of my regular position overnight. I had an order to go long at 26.77. Unfortunately, that wasn't triggered for like 1.6 handles or something like that. So I'm still only holding half a position long. I do believe that we can easily push higher from here. 27.20 is a good area to see some reaction, but I do believe that the market on the short term remains decently well bid. This is also one of the reasons why I think that USD yen might not be done correcting higher. So we covered this. We are seeing, having to do with the cable, we are seeing some reaction. I need to remind you that this zone that has created the reaction is a zone that was more or less expected to create some kind of reaction for two reasons. First of all, it's a 78.6 retracement from the pre-Brexit high. We also had 7 consecutive up days in the cable, so the market is obviously looking for an opportunity to at least correct somewhat lower. Now, having to do with the fiber, I'm not going to mention anything about it. In my opinion, it remains within a triangle. That means that I would still favor a break to the upside, but there's nothing to see yet here. Same thing, unfortunately, we haven't had much volatility, so not much to mention. I have to say that the metals remain within ranges. I mean, gold, silver, let me show them, remain within their equivalent ranges. Here is gold. Go, and here is within the triangle. Here is silver within another formation in the middle of a larger formation. So silver is very subdued. Palladium is finally showing some kind of a reaction to this resistance area, but in my opinion, it remains quite bullish. I'm really, really hoping to see a move a little bit lower towards 970. I'm going to be looking to buy it there. Copper still remains within a consolidation. USD ruble, I'll keep showing this because I think it presents an opportunity. It's trying to find a low here. In general, I'm looking to buy USD ruble, even if it moves a little bit lower from here. Now, the other pairs we have to have a look at are the crosses, because they are the ones that have been moving mostly during the past few days. That volatility has been rather subdued. Euros still remains in a corrective downtrend. Euro Kiwi more or less the same. Pound Aussie and Pound Kiwi have already broken out though, and you need to keep this under consideration. Here it is. Pound Aussie is breaking above a triangle. That points to a new high, 187.13. The 161.8 extension is a good area to be looking for a high. The Pound Kiwi has also broken from another type of a consolidative pattern, an expanding triangle. Ideally, we would want to at least see a retest of the 198 for the zone. So let me see if there was something else I wanted to mention. Yeah, let's have a look at the Aussie and the Kiwi, and then I'm going to pass it to Andre, because I'm sure that he has some things he's looking at. The good thing with harmonics is harmonics and Elliott waves, both of them are focused more into the future. Even when you have markets consolidating, they always point to something in the near, short term, and even medium and long term future. So a good idea to have his insight. Aussie remains within a descending channel, but as long as it stays above the 0.7740 area, I'm really not excluding the possibility of another push to the upside. So I'm in the near term, I'm maintaining slightly a bullish bias for at least one more push higher. But that's not enough for me to participate in this market yet. And same thing with the Kiwi, it's correcting lower. It's now retesting a horizontal area of support resistance. So it wouldn't really surprise me if we found some support anywhere between here and 73.25. So I'm going to be monitoring this. If I see a reaction from here, I'm going to be feeling quite comfortable that we should see at least a push once again to test the ranges high at 0.7436. Let me see if there are some questions I also need to cover, and then I'm going to pass it to Andre. Let me see. Okay, a question about crude. In all honesty, nothing has changed from what I said yesterday. I mean, yes, we did see a reaction from new highs, and new highs always brings in mind the possibility that this might be a bull trap or whatever. But personally, I still remain cautiously bullish. I would ideally want to see another move to the upside to at least test a 127.2 extension of the last corrective move at 69. Even a push towards the 72 area, which is the 161.8, wouldn't surprise me. And I would be more than happy if I saw something like that and then a failure to then trying to, for the first time in a long time, to try to be short this market. Eric says very correctly, careful bearish crude. Gartman is short, I heard. Okay, that's an extra that's an extra reason to be expecting at least one more high then. Okay, thoughts on the gappy? Let me show the gappy. Here it is. Okay. The gap is testing once again. I mean, it's trying to penetrate this ascending channel. It still remains below the 78.6. I was short. That was one of my trades that didn't work out. One of the few trades I was lucky not to work out during the past time. But I have to tell you something. I don't feel comfortable even attempting once again to be short here, simply because it has already overthrown from what I had in mind. It looks different than I would want it to look. Now, does that mean that it cannot roll over from here? It sure can. It sure can. As long as we stay below the 78.6, this can still prove to be a corrective reaction from the lows. I did believe that the move lower was impulsive, so that would mean that we should see at least one more push to the downside. But my confidence is that is not high anymore, right? So I would really need to see like a big reaction to believe once again, that the chances of a break lower are high. Until then, I remain more or less neutral. Okay, so I can help you more in that. I really want to see more things to increase my confidence. Please help me because of my ignorance. I sold pound pairs thinking they have gone too high. Is there any possibility of pound pairs reversing? If there is a possibility, yes, there is. But you should be very careful whenever you're trying to fade a trend. You should have a high confidence that what you're doing has a chance of working. And most importantly, you have to have in advance a very well-defined risk. Because just selling because something is high, I mean, let me give you the most obvious example. This is the USD against the Turkish lira. So when was it too high? Here, here, there, 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 here. It's always too high, and it keeps moving higher, right? So, there is no coincidence that following a trend usually, I mean, for the vast majority of people, is more profitable than trying to fade it. So at least when you're trying to fade a trend, you should know that you're moving counter trend and at least have a very well-defined risk reward. Aussie monthly looks to have a bear flag. Listen, I agree with that. And if you remember, if you were watching, I've said in the past that I do believe that eventually Oz is going to break the downside. And why is that? Simply because the larger move was to the downside, and this move to the upside simply looks corrective to me. Now, does that mean that we're going to break down from here? Not necessarily, because nobody can exclude the possibility of another push to the upside and then failing. So if you're looking for a long-term trade, sure, this looks corrective to me, and I do think that the chances of breaking to the downside are extremely high. But we need more confirmation that the timing of that happening is now, not a little bit later. Name the platform for checking correlations and please arrange. You can check. Listen, you can check correlations mathematically speaking just by importing data. For example, you can even do it in an Excel, right? You can use like end of the day closes, import data, export actually data from a MetaTrader, then putting it in an Excel, and then mathematically checking correlations. So you can make yourself a platform that will check correlations. Other than that, you can eyeball correlations. So for example, if you go to TradingView and you overlap two charts with each other, you can eyeball what kind of correlation they have and whenever they are positively or negatively correlated. So it depends on what you want, mate. Okay, another question about Euro Pound and Pound CAD, and then I'm passing it to Andre. Okay, fast look at the Euro Pound. This is the weekly view of the Euro Pound. I think it's breaking down. I think that a confirmation will take us down to the 83, 83.50 area. So that remains my outlook. It has remained so for a long time. And let's have a look at it on the daily chart. As you see, if I bring it up here, as you see, we've broken, here it is. We've broken below this trend line support, and that opens the door for the move I was talking about. I think you should consider that 0.8730 is resistance from this point on. So unless we break back above that area, I would remain bearish, looking for weakness to extend lower. And let's have a look at the pound CAD, and I'm passing it to Andre. There we go. Pound CAD, corrective move lower, trying to recover. It wouldn't surprise me to see something like this. Like an A, B, C. Okay. Ideally, I would not want it to go below here. As long as it remains above there, I think the bullish trend remains intact. Okay. So that's it. Thank you very much. I'm going to pass it to Andre. You can keep posting questions. Andre can definitely have a look at them. Andre, I just unmuted you. Welcome.
Hi, Steve. How are you?
Hey,
can you validate my audio?
We can hear you perfectly fine, and I just passed you the screen as well.
Okay. I need you to support me because I can't check the answers from people.
Absolutely.
Okay.
Dale is here as well for that.
Okay. Thank you. So, hello everyone.
We
Dale.
can see your screen, by the way.
Okay. It's oil, correct?
Yeah.
Okay.
It's good.
So this is I will start with this one because you mentioned it previously or recently, and we have oil rejecting or feeling some pressure here at 224 extension and printing what I call the shark pattern. It's a bearish pattern that usually by default will search for the 50% retracement from the most recent behavior. We can see the 50% retracement synced with this. There are two small candles here. This is the previous head and shoulder formation, and there are two candles here at this 50% retracement that can act as some, that can put some pressure there. the 161.8 from this last bullish momentum, this bullish wave here, and the 161.8 usually acts as a support or a resistance, that will depend obviously, but as a pressure zone, a reversal zone also, and it can print another reversal behavior, another shark pattern between the 161 and the 224. But there are a few fibs as pressures, so as pressure zones. First of all, the 38% retracement from all this swing. Obviously, the first fib level where the price may feel some pressure. The 161, the 50% retracement. Also, actually, we have a huge box of, let's say, a confluence huge box of Fibonacci's where we can see the market reacting into another bullish momentum. Until there, I have no pattern at this moment, just this reversal at 224, and I do expect a 50% retracement. And as we can see, the market is reacting right now. So above, obviously, there's structure, and as Steve has mentioned before, we need to break this bullish momentum in order to consider a breakout into a bearish, into an eventual deeper pullback or into eventual deeper retracement. But until there, I have no setups for now, and this is a 4 hours time frame. Usually, I like to work inside those time frames, eventually on higher time frames. So
nice work, Andre.
Yeah, thank you, Dale. Welcome you again. If you need somehow to interrupt, you just need to obviously, it's always a pleasure to listen to you and to learn from you also. So I learn every day. I'm here, so I become a loyal follower, and my presence here is also usual. So I learn a lot with your experience, and not only from you, obviously. Learning is a constant process. No, we have no age to stop to learn. So
yeah, there's an expression: you're growing or you're dying. Like
absolutely.
Like the crude is right now, Andre.
Yeah.
Curious, nice picture on the crude.
Yeah.
What else is on your radar?
No, crude. It's a special trade because at this point, as obviously we all the industry was expecting with the Syria events, people were expecting a rally on oil. But
okay.
Well, I base my trades but only on technicals, right. only based on the harmonics. When I see a pattern, the completion points when I see the price, and we can see this right here.
I understand that there are support levels at different fibs and extensions on the way down. Is there any harmonic pattern, Andre, that would take it under the low of 62?
Into the low. Eventually, let me just change this time frame.
Because I think it's possible that even those longs get tested out here. I know that people are going to be buying breaks all the way down.
Yes.
I'm wondering if there's.
Yeah, let me just measure. We need to measure these two the extension. So we have the price has extended above the previous high. So we just need to measure these, and this is pure speculation, obviously, Dale.
Right.
It
was all news driven into the run up of the missile launches.
Yeah, but even if the projection, I have a criteria here. So I have a 113 extension. The price is rejected to trade above it, and I can consider this one of the criterias for another shark pattern. And usually, and it's a common extension, a reversal zone. Usually, I will search for reactions between the 161 and the 224 extension. Obviously, the 224, actually both of them. So the 161, it will nail the previous lows.
That's what I'm looking for.
Yeah.
Okay, so there is a harmonic pattern that would.
There is a harmonic pattern here.
Okay.
And we can see these as something like this.
Okay, I asked questions for me, hoping it's answering our attendees, face warriors questions at the same time. So, thank you for that.
So but again, it's pure speculation. Obviously, I never know if the market will achieve those levels, but I know what to do when the market achieves those levels. Okay, so we need,
One of our attendees is asking what period RSI you use.
I will show you. I use an 80 and a 20 bands as oversold and overbought conditions because I like to see those harmonics completing on extremely overbought or extremely oversold.
14 day RSI?
7.
Okay.
7. I use a 7.
Why did you select 7? Number of completion?
No, because I have tested between the default and other different layouts, and I feel comfortable between the 7 and the 8 length trading those harmonics, because most of the times I work inside the 1 hour, between 1 hour and 4 hours time frame, so I don't need the length so extended to trade my. But this is just my personal opinion. Obviously, we need to find that comfort zone when we trade based on those indicators. But it's 18 and 20 with a 7 and 8 length, and I use MACD, the default MACD. This is a MACD 4 color available on Twitter on TradingView. 4 color because it will print us 2 different colors when the market starts to change the momentum. So and it also shows divergence markets.
Right.
And well, we have here a clear one. So based on this divergence, we have the completion point also for those harmonics that I showed you before on the 4 hours time frame. So I do expect at least again the 50% retracement by default for this pattern. But this is oil, and as we mentioned before, it can trigger into a bullish momentum based on external events, and eventually our technicals will fail somehow. So, but again, we have some patterns below. Yes.
Okay. Do you want to do some analysis on the fly? There's a couple of instruments being asked. One is from Joe. Any thoughts on the Canadian USD CAD? And the other one is 4-hour view of gold.
Let me start with that gold 4-hour chart.
Looks like it wants to break down there.
It seems like, no. Yeah. It seems like, but somehow we have no bullish hidden divergence for now. But it's a strength, the strength on RSI. Well, it can happen for sure. It can happen, but and we have the momentum also showing some potential for that bearish momentum continuation here. 4 hours time frame chart.
Any harmonics on it?
If eventually we have this retracement here, we need to measure this pullback here. Let's check if the market has achieved the 61.8. We have the 61.8 here. Let's measure above. Eventually the market has failed the 61.8. So at this point I can imagine a bullish setup here, somewhere between the 88% retracement. We can use also an extension here. This is my cat. and 127.
Your cat's a gold trader.
It's my companion. It's my companion.
I think your cat is long.
I believe so. I believe so.
You have like a gold kitty collar around it?
No, it's a cow. No, it's a cow. No, we have here, based on the most recent behaviors and ratios, it can trigger on two different places. One of them is the 127 extension from this bearish momentum, the 127 extension, or the 78% retracement. So it's a box, it's a cluster box that we need to pay attention. Obviously, we need to understand that the market eventually will find support there based on the most recent price action and structure. It may or not. We need to identify, once the market achieves those levels, we need to identify the conditions and somehow to search for our pin bars to engage the market if necessary, obviously. But at this moment, I'm not interested to short or buy gold. I need to wait for this market. I have nothing in particular.
So then, besides crude, what's on your radar?
I have S&P. I am also, as Steve has mentioned before, and I believe I have.
Dave Floyd, I see you in the house. I'll be. You're about 4 minutes away from your interview. Okay, go ahead, Andre.
Yeah, I can finish just with this approach on S&P. So this is there during these periods of consolidation, and I'm sorry because it's extremely colored and sometimes like people may confuse these harmonics.
I had some shrooms for breakfast.
Yeah. Okay. But well, the idea is inside these huge consolidation periods, it's possible to detect those patterns based on specific Fibonacci ratios, retracements, and extensions. So the market here at blue has completed the butterfly pattern at 127 extension after a deeper retracement at 78% retracement, a new pullback respecting the previous highs, and then a 127 extension pullback. From here, we expect to trade the Fib levels, the 38 and the 61.8 by default, and then the market has developed into an alternate bat pattern, very, very close to the 113 extension, rejecting by 2 or 3 points the 113, and then again. At this point, this is not a usual pattern for me, the 5-0, but it's very similar as a shark, but it extends to the 161 extension from the first movement. So we have a first movement, a retracement, and then an extension. This needs to be a 161 extension, and then if the market finds a resistance at 200% extension, it will be considered a bearish 5-0 pattern at 27.27, the 61.8 at 27.05, also the golden ratio by nature a pressure zone. The 161.8 again for this green eventual shark pattern at 161.8. It can extend a few points above to the 224 extension, but we have here a very strong zone for bearish momentum to start or to eventually to develop. But again, we are inside this let's say ascending channel or ascending wedge, and we can expect a breakout of that channel first.
Okay. So everyone's looking to sell this rally, Andre, that's bearish.
I believe so. I believe so. Yeah.
So my question
yeah,
from Dale Pinkert, before I go to Dave, is do you have any kind of longer term harmonic pattern on, say, the daily or weekly that gives a possibility of a new high in the market?
Of a new high? No, we have all the indexes. We have a lot of indexes playing reversal patterns that can trigger into new highs, including Nasdaq and well, other indexes also. So we have.
See your Nasdaq, because I trade that. I was looking for one more new high on the Nasdaq.
One more? I'm sorry, Dale.
On the daily.
On a daily, yeah.
For a third drive.
Let me check that.
All right. So it's possible or not?
Oh yes, it's possible, and the market is very strong at this moment. No, I will not. At this moment, the pattern that we found here, it's actually the cipher at 78% retracement, also a trigger to a new eventually to a new high. We never know. I trade based on the Fibonacci's, you know, Dale. I engage at 78%, but I based my strategy on those two Fib levels by default, and then above the 61.8, the second target, it's a bonus to enjoy with a dynamic or a trailing stop behind. So that's what I do.
Beautiful.
Yeah.
You're a great
Okay.
addition,
Thank you.
Andre.
Thank you very much. I will try to participate more inside the chat room because I was not able to get inside so much. So, but I will try my best because I like to feel
you
the
better.
communities.
You better. Yeah. I'm going to tell our president Donald Trump that. And you know what happens if if he's not happy with you.
Of course, I know. He's a very dangerous person.
Be very afraid. Very afraid.
Oh yeah. I'm very afraid of Donald Trump.
I'm going to pay.
Especially here in Portugal, we are very afraid. Yeah. Very afraid.
Thank you, brother. All right.
Thank you very much.
I haven't talked to Dave Floyd in a long time. Looking forward to doing so, hearing your voice, Dave. I'm making you the presenter right now. Welcome.
Let me mute first, okay, Dale? I'm sorry.
Okay, mute you.
Okay, thank you.
You're welcome. I don't see you. Hi, Dave.
Good morning, Dale. How's the sound over there? Everything, you can hear me okay?
Real clean, buddy. How are you?
I'm doing really well. How about yourself? It's been a while.
Yeah, we've gotten a little bit older. Huh?
Yes, unfortunately, that is the truth, isn't it?
It's better than the alternative. So you're on the West Coast too, Dave. So I get up at 3:30. What time do you get up?
Yeah, you got me beat by a half hour. I get up at 4, and I think it's like the best time of day to get up. It's the only time where I actually have time to think without being distracted by life.
Yeah, the world is still asleep. Reminds
exactly.
me that scene on Wall Street where Gordon Gekko's on the beach. He already made like 800K in Hong Kong gold, and he's calling Bud Fox. And I also wrote a poem about our lifestyle. Tell me if you agree with it.
Okay.
Our life is like that of a farmer, up before sunrise, asleep after sundown. The only difference being that we nurture seeds of greed for the harvest of pips.
Very well stated. Very well stated.
So have you been successful in bringing out the greed in people lately, Dave?
I don't know about the greed necessarily. I mean, I've been in this business a long time, 20 plus years. And I think for me, and again, I'm making a little bit of a speculation here, but I don't think I'm far off. I think 2018's actually been, for anybody who's got some chops in the game, it's been fantastic. I don't know if, people
like the two-sided markets now, right?
Pardon?
Yeah, you're happy to see indexes trade both ways.
Exactly. I mean, there's price discovery, for crying out loud. Imagine that. Yeah. So I think, if you're relatively new to the game and you've been involved, let's say over the last 2-3 years, this might be a kind of like a holy crap moment. For guys like you and me who've been around the block many, many times, this is like,
the old days.
Well, it's not only like the old days, but to me, it brings out it allows you to kind of exercise what you do well on a day-to-day or a week-to-week basis. So, you know, bottom line for me, 2018 has been a joy. I mean, until we got to February. January was the same old nonsense. Grind higher every day, scratch your head, don't try to overthink it. You know, don't try to rationalize it because that was stupid. But, you know, since we got into February and then into March, you know, it's been great. So I'm hoping that this is kind of a shift back to a more, you know, price discovery oriented market. And if it is, that's fantastic. And if it is, and you're new to the game, you're going to have to kind of put on your thinking cap and really, you know, think differently about how you're going to trade the market. So, you know, hopefully we'll talk a little bit about some of those tenets today and show you what I'm looking at, give you a sense.
You're a veteran, Dave. So, you know, I know we have increased volatility in equities. You could go home with a great close, and then in the afternoon there's a tweet, or there's an FBI raid, and the S&Ps are down 40 in the afternoon. Are you surprised with all the volatility that we're getting in indices that we're not getting the same type of volatility in FX?
It's an interesting question. We did a trader meetup a couple of weeks ago down in Marin County. I was down there visiting, and I hooked up with JC Parrots and my colleague here at Aspen Trading, Brad Simpson, and we did a trader meetup. And that was one of the things that came up. Christian Kerr was at the meeting, and for those of you that don't know, Christian Kerr is
he's excellent.
Yeah, he's a veteran.
He does a lot of GAN, doesn't he? I've interviewed Christian.
Yes, he does. And, you know, he's got a pedigreed background in the FX market, spent a lot of time on the institutional side. And he brought up that exact point. He said, you know, despite all this volatility, the G10 FX volatility is still in the toilet. Yeah. And I actually have got a chart of it. I can probably dig it up while we're on this webinar. And, you know, for me, that really struck true. And it really I'm only able to really right now in FX land, I can really only watch the Euro and Dollar Canada. Those are the only ones that actually have some movement that might be somewhat forecastable, for lack of a better term. But the lack of volatility in FX is really quite puzzling, given that it's such a major asset class.
You know, a possible explanation is that the market doesn't believe there's going to be a trade war. But should that really manifest, it will then begin to manifest in the currency markets, and volatility will explode. So right now, the equities are worried about it, and the FX market is discounting that it's not going to happen. That's an explanation that I've read, and I ask a lot of veterans about it, because if the trade war was ongoing, and you know we have another 60 days, who knows the way things change every hour, what's going to happen in 60 days. But if the tariffs go into effect and tit for tat, then I think you'll see an explosion of volatility, increased ATRs. That'll tell you the trade war is real when it shows up in FX. That's what I've read.
And that may very well be the case. And, you know, that type of a scenario is kind of like what we dealt with in the S&Ps for the last several years, or any of the major indices. You could come up with any number of logical explanations, but it didn't really help you make any money. You know,
there you go.
Bill Fleckenstein is a friend and a colleague of mine, and he's always famous of saying, you know, obviously he's usually looking for the market to break to the downside, and his philosophy is, you know, shoot him in the back. You know, let the market break, whether it be up or down. But he's, you know, in this case, he's talking down. Let it break lower first, rather than trying to be the hero and isolate the top or isolate the bottom. And I think that is very, very sound advice. And I think most people know that intellectually. Whether or not they do it on a practical day-to-day level, maybe not. I mean, I'm guilty of it every once in a while. I'll think I'm smarter than the market. But as it relates to FX, you know, eventually, yes, the volatility will come back. And when it does, it'll be welcomed with open arms. In the meantime, you know, luckily, since I'll trade across different asset classes, albeit with a very narrow focus, I've got plenty to keep me busy in terms of the S&Ps and 10-year notes. So, you know, there's plenty to do until FX lights up. But I do think there's, you know, there's a couple trades here and there in FX. We're just not getting that robust move that we would like to see.
I hear you're a fan of Grega Horvat.
Grega, oh my God, I've known Grega for a long time. We've never actually formally talked on the phone, but we've exchanged many emails. Obviously, we share a kindred spirit in terms of Elliott Wave.
Yeah.
Which of course a lot of people poke fun at. They call it voodoo, they call it whatever, and that's okay. But for me, and I'm sure Grega would agree, it provides a structure and an objectivity, which is a word that most people don't associate with Elliott Wave. But I think if you really look at it, it can be objective. So yes, I know Grega, I think we approach the market. Oftentimes we'll come up with similar conclusions, which is a good thing to see.
Yeah. So, you know, I say it so, you know, knowing that you guys, you know, see a lot of things similarly, and I know that there are E-waivers that see things differently. I would say fade Grega and Dave Floyd at your own peril.
Well, I'm sorry, what was that last part, Dale?
Fade Grega and Dave Floyd at your own peril.
Well, I appreciate that very much. But, you know, I think a lot of it goes, you know, again, it boils down to like anything in life. We've got a lot of, you know, years under our belt, and I think that really goes a long way. And, you know, it's one thing to be kind of approach the market as an engineer where everything's A plus B equals C, but the markets aren't like that. You've got to have a degree of flexibility. And, you know, again, probably a well-worn phrase, trading is an art form on some level. There is a scientific aspect, but there's also an artistic. So you got to unlock that creative side of your brain for sure.
Okay. So let's get creative with your count here in the S&Ps. Looks like you have the end of 3 up at potentially 2775.
Yeah.
Does that imply a 3 is completed there? A pullback and then new highs?
Well, let's do this. Let's kind of mix it up a little bit. Let's go back in time, shall we? And let's go back to that lovely, and I mean this in all due seriousness. Let's go back to this lovely phase of the market back in late January, early February.
Love Niagara Falls.
I love it too. It was, you know, February and March were very kind to me. My managed accounts were up, and suddenly people realized that active traders actually know how to do something in the market. But at any rate, what I'm going to actually change this count, or at least offer an alternative on this webinar, because I think things are changing. What I had been looking at is that this low here back in early April may very well have been the completion of wave 4. Now, it's possible it would have been a truncated wave, you know, where you've got wave C ending at about a 618 projection of wave A, which not uncommon, or, you know, it's not that it's out of the possibility, but it's not terribly common. What's got me rethinking that, though, is this price action right in here, and I can zoom in. But to answer your question, prior to, let's say, all of this price action over the last couple of days, I was thinking that we could probably go up to around 2766. But because, you know, if we had completed wave 4, that would have been wave 1 up, wave 2 down, and then of course the natural progression would be for wave 3. That could still play out. Again, it's anybody's guess at this point. But when I look at this type of price action, I'm just going to zoom down to a 2-hour chart to kind of get a little bit more granular. This to me is a bit, I don't want to say troubling, but I can't really get my head around that. If this is a wave 3, this is not the type of price action that would be indicative of a wave 3.
Yeah, a lot of overlaps. Is that what you're saying?
Exactly. I mean, this could be a leading diagonal right here. This could be wave 2. So yes, that's all possible. And I know some people on the webinar here might be going, oh my God, that's just far too much ambiguity. I need clarity. And I get that. But again, the markets don't always unfold like that. I don't think there's any indicator or approach you can put over a chart like this and walk away with any degree of certainty. There's always going to be some ambiguity, and you have to account for that. So that being said, it's possible that we've got the A wave down, we've got the B wave, This might be simply wave A of that final C wave. This would be wave B. And then that takes us down to around 2450. So let's just do that just for ease of illustration. Let's just blow this up. Get rid of this. So what I'm basically doing here is I'm basically starting to arrive at a conclusion that it's possible that that we may not be complete yet in terms of our downside price action. And that's not going to work. Let's just do this, make it a lot easier. So this would be the A wave down. We'd be in wave B right now. And for those of you that are wondering, I'm using a program called Motive Wave, which makes, as you can see, makes labeling my charts much easier than having to go in and manually label them. So let's do a little brief Elliott wave education in here. If we assume that this particular forecast is correct, we've got the A wave down in 5 waves. Now we're grinding, overlapping higher on wave B. Wave B is typically going to retrace about 618 the distance of wave 1, or I'm sorry, of wave A. Well, right now we're in between the 50% and the 61%. So if you wanted to get super scientific, we would say that 2709 is really the level that's going to be key. I'm not so optimistic that things nail that price exactly, but I would expect that if this forecast is correct, that prices are going to start chopping in and around this area and then lead to one more leg lower, which could take us down to 2450. And naturally, if we move lower, the volatility, of course, in the market's going to come roaring back. Obviously, this market to the upside is very labored. You know, I don't wed myself just to the technicals. I do look at other things like quantitative analysis and stuff. And I still think overall that what we've seen since the February break lower is a very labored market. It doesn't mean that we couldn't go to new highs. It just, this is not the type of price action that suggests that to be the case. So I would say, based on, as you correctly pointed out, Dale, how we're overlapping and grinding higher here, this type of a forecast makes sense to me. You know, right now I have no position in the S&Ps. You know, we've been trading the S&Ps periodically, given the volatility. Right now I'm flat. And trying to look for what that edge may be. And, you know, this is one scenario that makes sense to me. I looked at it this morning and I said, you know, this is probably the higher likelihood in here. I'm a little uncomfortable being a buyer in here. But, you know, time will tell. You know, I don't have any skin in the game right now, so I can sit back and be objective and evaluate accordingly. I don't have to talk my position right here because I don't have one.
Isn't that a nice position? And don't you see the market clearer when you're flat than when you're in?
Exactly, and you don't always have to be in. Just because the markets are open doesn't mean that you've got anything to do, and that's obviously that's a tricky part for a lot of people.
That's the hardest part for most people.
It is the hardest part.
Around and waiting for the setup that's so compelling. You know, I like to say, Dave, that the best trades are the ones that you have so much confluence and a great case to assume risk, like a great attorney going into court, not with one piece of evidence, but, you know, a stack of it, and that you would feel worse seeing the trade work without you than being stopped out attempting it.
Exactly. And it's really easy to get sucked into not waiting for that because we have at our disposal nowadays, again, I'm stating the obvious, but we have so much information at our fingertips. It's really easy to listen to me right now and say, well, geez, Dave's got nothing going on. I need something. I'm going to go listen to this guy or this gal. You know, and that's where people make their fatal mistakes. You've got to find what works for you, stick to it. You may go a week or two without making a trade. You know, 80% of the time is, or 80% of the money I make is usually in 20% of the time that I'm trading. You know, it's lumpy. It's very lumpy.
So is there any other instrument you want to give us a view on?
Yeah, you know, for me, what's been working the best this year, and I also like the way it trades. It trades in a more gentlemanly manner, as I like to call it, is 10-year notes. I love the way 10-year notes trade. I happen to be short them. I've been short them off and on. I don't think we've had any longs in 10-year notes this year because let's just simply look at the big bird's eye view. Again,
I've seen this labeled as an ABC4, which implies new lows, which
exactly.
Probably gets us to the over 3% yield on the 10-year.
Yeah, that's going to be the key thing. I mean, this is the 10-year note chart. Clearly, the trend is down. As I have it labeled, that suggests that we're going to head down towards 117.25. We are short at two prices. We're short from 120.28.5, 120.19. I've got a stop loss, and when I say stop loss, I'm going to reevaluate at this level. You know, I'll look at it and say, yeah, this still makes sense, or no, I got to get out. I got to get the heck out of here. We had a little overlap here over the last couple of days, which is great. We got below 120.16, so I'm pretty confident that we're going to move lower. But you bring up a good point, or the corollary to this is just 10-year yields. So let's just take a look at those. Again, 3%, that is the magic number. I would actually argue 295 is the magic number because that's where we topped out about a month ago. If we can get above 295, and if we assume that wave 4 is complete, which is what I am at this point in time, then 10-year yields are going at minimum to 327. Now that brings up a whole, I'm sorry, go ahead, Dale.
Oh, okay. You know me, I'm always looking ahead of it. I kind of think this is a layup, although nothing is.
Yep.
I'm looking at your wave count on both the yield chart and the notes, and I mean, we'll be completing something up there, Dave, and either wave 1 or I think you had 3 on the notes. There could be a pretty good sink in yields and rally in bonds after this final decline that we're looking for in bond prices and rise in yields. Are you looking that far ahead, or just
No, not really. I'm just looking. I'm really focused on this 295 and the 3% yield. So I'm just looking for that next leg of yields to go to 327, and then if we just flip back to the 10-year note, that move to 327 or anywhere above 3% in yields drives us home towards this this ideal quote unquote 117.25 or 117.23 price target.
Okay, so explain the difference, because you have them both being as an ending wave. You have a 5 there in June and a 3 underneath, which I'm assuming that's 5 of 3, and then a wave 4 can ensue. And on the yield chart, you have it just completing wave 1. So
yeah, you don't always get the instruments to line up exactly in terms of the wave count, but if you get them directionally, you're still going to get the same impact. Either way, I think, as you said, looking ahead, yes, you're correct. When we get down into this price level, I suspect it will be sticky, meaning prices are probably going to have a hard time moving lower. If you are a counter trend trader, which many people are, yes, there's the opportunity for you to get long notes down there, and then we'd get some sort of a retracement higher in wave 4. I don't know if I'll be playing that. I don't tend to be a counter trend trader, although I'll take a couple shots here and there. I'm just more comfortable sitting here in the direction of the trend. And what I really like about 10-year notes lately is that you're not getting that. It's funny, we started off talking about how we want volatility. Yeah. You're not getting a lot of volatility in 10-year notes, but what you are getting is price.
You know what I really noticed, Dave, and you've been around, is during these 600-point sell-offs in the Dow, there's been relatively little flight to quality into bonds.
Absolutely, and that to me is very telling.
That's kind of a danger sign that, to me, that if they can't rally under what should be favorable conditions, there's trouble in River City.
That's I think that's a very valid point. That's comforting to me when I see that. And again, we started off the conversation saying, wow, we love this volatility. Well, you're not getting a lot of volatility in 10-year notes, but what you are getting is price persistence, and I'll take that too.
Yeah, you're getting a trend.
You're getting a trend, and you know, it's weird. When I'm in a 10-year note position, which is fairly often, I find myself rarely looking at what it's doing because it doesn't move around in an insane manner. You know, you can look at that and say, well, there's a lot of opportunities in the S&Ps, and yes, there are, but my God, it can be manic at times.
I can't stomach it anymore.
Yeah, well, I'm in the same boat. I'm not a big fan of trading the S&Ps.
Yeah.
I'll usually do it typically through options. You know, I'll do it through a call spread or something, or a put spread, but I'm with you. That type of movement, I'm just like, it's a little too much for me. I like
Yeah,
my.
so, you know, besides finding a trading style that suits your personality, like Jack Schwager says, find the right instrument that has the kind of beta that you feel comfortable with. Are you there, Dave?
I am. My mic queued out for a second. I agree 100%. And you know, for me, I analyze the heck out of the S&Ps, but they're not my favorite instrument to trade. And if I do trade them, I do it through options because it dampens that volatility, which just doesn't work for me.
We're getting a question from the community. Could you give us a quick look on the trendless dollar, and maybe and tell us if you see anything besides sideways there?
Yeah, well, you know, we've got dollar volatility or lack thereof at 10-month lows. So for me, I think the dollar index is key in here, and key from the standpoint of, you know, don't trade yourself into a lather here because I don't really know what you're going to do. So again, for me, I've got this labeled as possibly a completed wave 4. All I know is that we've got sideways chop. I still favor a move lower. Anything below 88.99, you know, I'm back on to building long euros and short dollar CAD positions. Okay. Right now, I've got really nothing. I'm flat in the FX market. I'll show you in a moment. I've got a shorter term, and when I say shorter term, it could last, you know, a few days. I've got a shorter term setup that I'm looking at in the euro here, but that's going to require this dollar index to break lower. And again, you know, timing the end of a correction is so goddamn hard. You know, there's so many places you could have got your hand slapped in here over the last couple of weeks. Again, I'd rather wait on some level to kind of shoot them in the back, or have a very small position on and allow yourself the price action to move up and down, knowing that you're not smart enough. And I put myself into that category. I'm not smart enough to know when this correction will end, but I think it will. So if I want to be, let's say, long the euro in here, but I'm waiting for the dollar index to break, have a small position on so that you can let it move around and it's not going to freak you out. But my overall forecast, we are moving still lower in the dollar index. I think we get into the 86 level, 87, 86. Then I'll start to consider, you know, unwinding long euro positions. But this is how I see things playing out in the near term. And I think we're getting pretty close to getting that next leg lower. But yeah, again,
it feels that way.
It feels that way. Yeah.
Why don't you take the last few minutes, perhaps show your website and how people could reach you?
Sure.
Follow you. Your Twitter handle is @AspenTrading10. So,
sure. Love to do that. Well, you know, the one thing I would.
Why don't you say hello to Bill Fleckenstein and tell him it'd be a good idea for him to be interviewed by me? I
will let him know. There's actually a couple other people that I swim in the circles with that I think would be a fantastic.
Because he works for a bank still, he told me.
I'm sorry, what was that last part, Dale?
Christian Kerr still works for a bank, so he has compliance.
Yeah, he might be tough. He's at Citibank in San Francisco, so he's probably got that. He's got those.
Also, after hearing about Bill's trading style, if I ever met him, I would not walk in front of him. I'd walk by.
Well, that might be fair, but he's a super nice guy, so I don't think he'd do anything to you, Dale.
All right, buddy.
But you know, the one thing that I have that I would be more than happy to share, obviously, is this. I'm going to be in London on May 2nd. So if you've got anybody either in London or will be in the London area, I'm doing a half-day trading workshop on May 2nd at Duke's Hotel, which is a really nice boutique hotel. We've got 25 attendees at max. We've got about 6 seats left. It's $495 to come and hang with me for the afternoon. It's not going to be a didactic workshop where I'm just talking to you. It's going to be a very, engaging dialogue. I'm going to kind of go from A to Z on how I trade, very similar to what I did today, but in a much more structured format. If you'd like to come, use the coupon code REALVISION and you'll come for $4.95, because the early bird registration's over, but there's probably a lot of people on this call who weren't aware of it, so they obviously didn't know about the early bird. But use code REALVISION and you can get in for $495. Just go to the website, which is aspentrading.com, click on events, as you can see here, and you will go ahead.
This isn't Raul Paul, Real Vision, putting it on, is it? It's you, just you putting it on.
It is just me, but the Real Vision, they were obviously behind it in terms of promoting it to their users. The Real Vision code is from a promo we did with their users. So I'm just using the same Real Vision. And that's another place that you can see me. I do, in fact, I'm filming later today for Real Vision. It's a fantastic outlet if you want to listen to some really good professional traders talk about their craft. So I highly recommend Real Vision. But here's something else. So yeah, I would love to see you guys at the trading workshop in London on May 2nd. It's going to be a lot of fun. Here's something that you can get off the website. I put together a resource list called The List. Just go to the home page and you'll see, you'll have the ability to click on and download the list. It's basically like a 20-page PDF file of, you know, really good resources for traders, you know, software, books, periodicals, and, you know, research services. Highly recommend you do that. And if you're really feeling interested, take a trial to either my FX or stock service. And if you take a trial for $7, I'm giving away, or I'll send you out a copy of this book, Thinking in Bets, which to me is probably one of the best trading books I've read in a long time. It's written by Annie Duke, who is a former professional poker player. And really one of the key takeaways I came away from in that book is that unlike chess, and a lot of people associate trading with chess, and I think that's a bit of a misnomer. Yes, you're thinking strategically like you do in chess, but in chess, it's possible to know all the outcomes. Now, granted, most of our brains can't do that. Some people can, but it is possible in chess to know all the possible outcomes. Therefore, you know what, if you make a particular move, it's going to set off a particular set of, you know, counter moves. We can know that in advance. We don't know that in trading. And I think all of us agonize over, I need to have everything just set up just perfectly in order for me to be correct. And the fact of the matter is we can't. And it gave me a lot of comfort just knowing, you know what, it's close enough. And oftentimes when we have a losing trade, we beat ourselves up and say, oh, there's something wrong with my methodology. And the fact of the matter is there's probably nothing wrong with your methodology. It's just the way the markets are. And we don't want to fool ourselves when we're right either. I remember a trade a few weeks ago, we were short the S&Ps actually. And Anthony, was that his name, Anthony Cohn? The guy who resigned from Trump's economic advisory position, Anthony Cohn, or whatever his last name, or whatever his first name was.
One of those cones. Yeah.
What's that?
One of those cones.
One of the cones, exactly. So, and it doesn't matter. Economic advisor in the Trump administration. We're short the S&Ps, and we're holding the position overnight. And that news comes out. S&Ps drop. Now, I didn't know that was going to happen. We got lucky. That didn't make me think that I was any smarter than I thought I might have been when we got into the trade. And the same thing happens on the flip side. Sometimes we're wrong on our trades.
Never against luck, Dave.
What's that?
And $4.95 to see you in London is a lot less expensive than having a date with Stormy Daniels.
Exactly. And it's going to be fun in London. We're going to have a great time.
Yeah, you're living the big life, man. You're living the good life, and congratulations. Sounds like you've made a lot of progress and your visibility is growing. Congratulations, my trading warrior brother, and thank you for coming in and sharing your views and philosophy with us today, Dave.
Dale, as always, I really do appreciate it. Let's not make it so long next time, and I will definitely reach out to a couple colleagues and have them have you reach out to them. I think you could get a couple of really sound people in here distilling some sage advice.
Yeah, and you know, and Raul Paul, as long as we're, you know, like Old Home Week, I've told him I thought I'd be a great guest for him on Real Vision, but you know, he found a great guest in you, and
well, I appreciate it. Dale, as always, my pleasure, and thank you very much for having me, and thank you everybody for attending and listening to what I had to say, and hope to see you in London.
Yeah, have a great time there, Dave, and may pips rain down on you till we talk next.
All righty, bye-bye, Dale.
All right, buddy. So that's it for Turnaround Tuesday, everybody. Let me just take a quick look here at something. U.S. dollar Swiss about to do what I was looking for it to do. You're welcome, Kareem. Everyone have a great week. Have a great day. See you tomorrow. Good hunting, and remember, don't just count your pips, count your blessings. You're welcome. Steve Cohn was his name. Gary Cohn was his name. Adios.